traders at Access Bank expect higher offers in the bond market as participants with successful speculative bids seek to exit their auction winnings due for settlement. Kinskin Ukeje, the Treasury Team Member at Access Bank, joins us now for an update on the market dynamics. Kinskin, it's a pleasure to have you on the show. So let's talk a bit about the dynamics around this bond auction and potentially how that could impact yields going forward.
Okay, thank you for having me. On Monday, we saw the DMO offer 360 billion across the 28, the 34, the 37s, and the 49s, and we saw that auction oversubscribed by 993 billion. By the end of the auction, the results turned out by the DMO saw them overallocate by 241%, allocating 771 billion in auction allotments on that day. The settlement for that auction will be happening today. Market liquidity opened at 506 billion yesterday, so we should see market participants for selling off in order to fund for the excess of above 200 billion naira in bond winnings. So most of the speculative traders who have put in bids for that auction and have gotten funds will be doing a lot of sell-off at par or just below the just some pips below the bond winnings in order to fund for their winnings.
I need to come back to that point that you just made about the overallocation at 771 billion. I imagine many look at that number and suggest, is this a sign of things to come? Or would you say that there are peculiar circumstances going into this bond auction that led to this overallocation?
I just see the GMO exercising their need to borrow at this point in time, and following the liquidity in the market, they could take up as much funds as they can at this time.
But would you say that this also suggests that there's an expectation that yields will move higher and perhaps the DMO are taking advantage of the current yields in the market?
I would not say there's an expectation that yields would move higher because the market is really driven by liquidity in this time. Even in the month of March, we'll be expecting a coupon payment. In the month of April, we're expecting a bond maturity. So there's a lot of liquidity in the outlook, and that should push rates lower.
In the T-bill market, of course, we've seen rates really low. Given the impact of this auction on liquidity, do you anticipate that yields will begin to inch higher in the T-bill market as well?
I do not think the yields will inch higher. I think it will still be maybe lower in the short-term outlook. If there will be any high increase, it will just be for a very short term, and then it will go back because we have a lot of liquidity chasing the investments.
How do you explain this liquidity? Would you say it's closely linked to this Naira redesign policy and the huge amount of Naira that has come into the banking system? Or are there any other factors at play here?
Yeah, I could link it. You could see on Monday, over the past weeks, you've been seeing it coming. I think it's the clawback of the old Naira notes that have been deposited in the banks that are coming into the system.
But some traders that I've spoken to earlier suggest that the central bank had dealt with that in the past with the cash reserve ratio policy and debits relating to that. Would you say that the system has now been overwhelmed by that increase in deposits, or how will you explain that?
I would say the increase in deposits has come in to the system in tranches and not as a bullet payment over time, and we are still seeing those deposits coming timely across this period, and even the CBN trying to deal with it with the cash reserve tool. We could also see that market participants are also playing fast on trying to utilize these liquidities in their books in order to get as many investments they can as once they see the liquidity.
Moving to the forex markets, we've heard reports of illiquidity persisting in the investors and exporter foreign exchange market. Typically, you will expect that the central bank will intervene. What are you reading into the central bank's body language and activities over the last few weeks in terms of their capacity to do so?
The CBN has always sustained their intervention. They still conduct the retail SRIs auction, as they will be conducting another one this Friday. We saw them intervene today for the SME and invisibles transaction. I just think the CBN is still intervening and would sustain rates as much as possible within the levels of this 461, 462 in the meantime.